Not as good as realtors make them out to be.
We're in the stay in your lane season. This gentleman is telling you that FHA loans are not good. Let's hear him out and react to what he's saying.
And let me tell you why. The FHA loan, as we know, or the first time home buyers loan, offers you the opportunity to make a 3.5% down payment. Their credit requirements are also more lenient, which makes it easier for the first time home buyer, as well as the debt to income requirements. But here's the thing. The FHA loan carries something called the MIP, the Mortgage Insurance Premium. This functions similar to private mortgage insurance on a conventional loan when you're making anything less than a 20% down payment. The only thing is that with the MIP and FHA, the MIP never falls off. It doesn't matter if you have 20% equity or not. As opposed to a conventional loan where the PMI falls off after you've hit that 20% equity mark. You pay this premium on your FHA loan every month, but you also pay for it up front as part of your down payment. And that's the thing, your 3.5% down payment isn't going all towards your equity in the house. 1.75% of that 3.5% down payment is going towards an upfront MIP fee.
Okay, we're going to stop right here. So, who is this? Jose, San Antonio, Texas realtor. Not a personal shot against you. I'm sure you do very well in your business, but you can ask any lender. You're going to get anywhere between almost 1.5% less interest rate whenever you do an FHA loan opposed to a conventional loan, unless you are a first-time home buyer. Because of some of the changes that were made last year to help those that are at or beneath 80% of an area median income wherever you're buying, and you're a first-time home buyer, going conventional, specifically home ready, home possible, you could be in a better position as far as pricing. But for the typical person, that's not the case if you're not first-time home buyer. That's why FHA is a great loan product. So you have to know each person's specific circumstance. As an example, if you have a Chapter 7 bankruptcy with FHA, you can get back on the property ladder after 2 years have passed from the discharge date. Juxtapose that with conventional, you have to wait 4 years. So that's just one example. Going into the down payment and his theory that you're only putting half of the down payment down because of the upfront funding fee portion of the total insurance that is required with FHA. I disagree with that as well, because you don't have to pay for the upfront funding fee portion of the insurance. Most people finance it, which is 1.75% of the base loan amount. That's your sales price minus the 3.5 base loan amount multiplied times 1.75%. In fact, the agents that we work with are getting closing costs, seller concessions from people, and that's one of the ways to potentially use said seller concessions is to pay for that upfront funding fee so you don't have to finance more. The other point that he hit that I'll address quickly, if you put 10% down with FHA, then the monthly portion, the mortgage insurance premium portion, or the annual portion of the FHA insurance will go away after 11 years, similar to conventional. And in most cases on conventional loan, it's not 20%, but it's 22% equity position from the original loan amount. You can get around that from time to time, not to be technical, but that's the actual rule. Most realtors like conventional loans because FHA loans, in this case, or any government insured loan, USDA and VA, have minimum safety requirements, and they're not deal killers, but a lot of agents don't like it because on conventional, the seller can present whatever as far as the house is concerned, and they're going to get their commission check. So that's why a lot of sellers, a lot of realtors don't really like FHA, but a lot of buyers do because there's a lot of protections that are baked in the cake. Let's move forward.
In other words, you're really only putting 1.75% down on your house. And when you think about the interest timetables and how you're paying mostly interest in the first few years of your house and very little towards your principal, it makes you wonder what the real benefit of the FHA loan is.
Let me stop right there too. We gotta stop fear mongering. Here's the deal. The average homeowner in the US lives in a house on the low end 7 years, on the high end 13 years. All of this fear mongering that interest rate is front loaded, which it is. It's an amortized loan. It's not until you get around year 15 that you really start getting into the principal. There's ways around that. If you, again, case by case, if you say, hey, this is the home that we're going to be in for 30 years, well, then there's ways to attack those interest payments and pay a 30-year loan off, in essence, only pay 15 years worth of interest. It's all in the strategy. You don't have to be scared. You have to be informed, have a plan, and be able to execute it. Let's move forward.
You don't necessarily need to refinance your FHA loan into a conventional loan because that's probably not going to help you. The solution is simple. Make an extra payment towards your principal at the end of the year. But be sure that you're specifying that you want this payment to go towards your principal, because if you don't, your lender or your servicer is simply going to hold that payment in suspense and credit it towards your next month.
Like the gentleman is saying, what you have to make sure is this. You have to make sure that you've made your full monthly principal and interest payment first, and then any extra, any subsequent payment will go towards the principal. Most online servicers today have a great UI web interface that will allow you to make your full payment and just say, hey, whatever's extra, you want to apply it to the principal. But that's the key. You have to make a full monthly payment. That's why you don't want to do the bi-weekly thing, because in that case, you can not have that payment applied because the servicer is not going to apply anything additional until the full monthly payment is made. Shout out to you, sir. Appreciate the information and just want to set the record straight. FHA is a great loan product, and here's the deal. You want to deal with a lender that you know, like, and trust, and that's going to present all of your options that are applicable to you and your specific situation. More importantly, they have the ability to explain to you why you might choose one over the other based upon your overall goals. We'll talk to you soon.